All right, cool. So it seems like the whole world is talking about, thinking about, or feeling the effects of inflation. U.S. inflation rate climbed to 8.5% this March, year over year since last March. It's the highest inflation rate that people have seen since 1981. What's the practical effect of it? $100 a year ago is worth $91.50 now.
That's right.
One thing that we're talking about, getting questions from investors about, thinking about is, can people, if through their investment profile, their investment portfolio, make up for some of this loss that's coming through because of inflation? I think the best way to approach the conversation today is to go through some of the typical inflation hedges, assets that people bring into their portfolios in times of high inflation, talk about some of the benefits, weaknesses, plus minuses of the various hedging strategies, and see where we get to from a practical advice standpoint.
Sure.
So I guess the first one, of course, common would just be regular real estate. What do you think of real estate as an inflation hedge?
Sure. So I think what you're seeing now with inflation at 8.5%, it's really difficult for the average high net worth investor to really make up that margin. I mean, if you're looking at cap rates, let's say on single family homes, something that basically anyone with a few $100,000 can get into, it's very difficult to get cap rates, above 4%. Maybe if you did really well in a subpar market, maybe you can get 5. But then with cap appreciation at historical highs in real estate, are you going to make up for the 8.5? I think the answer is, for most guys, it's no. I think the only way to do it in real estate, you're doing large commercial development, largely build out projects to really hit those yields out. And really the ability to do that is use of debt.
Yeah.
I think on a pure equity-based real estate finance deal, it's going to be really difficult in the near term, at least, to make up for inflation.
Mm-hmm. And the prices we saw last month as well, statistically the highest mortgage rates that we've seen in a couple of years now.
Yes.
And then just today, when we're filming this, we see home prices rising again.
Yes.
So it's very challenging to find the yield that you'd look at and say, okay, I can make up for this 8.5% deficit that I'm now feeling from an inflation perspective.
That's right.
So, it's a collateralized asset, which people love. There's the potential for cash flow, but really, is it enough to get where you need to
Yes.
have the impact you need it to?
Yeah. And I think it's going to be really difficult as you're seeing institutional players like BlackRock come in and buy, let's use single family homes again. They're like one of the largest landlords in the United States and globally now. So no longer is it, Steve and Sherry who are buying their first house and then, they're not renting it out, they're living there. Now the average 30-year-old is paying rent to Larry Fink at BlackRock, right? So remember that their cost of capital is incredibly lower than the average individuals. So to be able to compete with them on pricing, when they want to buy billion-dollar blocks at a time, you won't be able to do it. So they're going to drive cap rates even lower because there's so much cash in the economy, so much supply, that for the average individual investor, and again, unless you're syndicating commercial real estate deals, I think in north of $50 million, it's without, and if you didn't use leverage, it'd be even more difficult. I think you're going to have a tough time beating that 8.5% hurdle.
It seemed like it was popular advice for our, childhood or the commercials you'd see on TV, but a lot of people would tell you to invest in gold. Yes. And gold's a good inflation hedge. What are your thoughts around gold? Mine personally being, it's challenging in the sense, and we'll see it in comparison to other assets as we go through today, but the fact that it's a non-productive asset,
yes,
has its challenges.
Yeah. I look at it as what's the purpose of your portfolio capital, right? Is if your purpose is wealth preservation, things like gold or land banking can be really sexy to do, right? And say, look, I'm generational wealth. I'm not worried about cash flow today, but I'm worried about, my grandkids having enough cash to have a university degree or maybe to go to Switzerland, who knows? Then it can make sense. I look at it as a hedging strategy really to preserve wealth. But to build wealth, You don't hear a lot of guys saying, "Look, I put $1.5 million US into gold, and I'm looking for a huge swing, and that's going to make a material difference to my financial condition." I think from a hedging strategy, purely for wealth preservation, it can make up an interesting part of one's portfolio. But for any kind of creation of wealth in an inflationary scenario, I don't think I don't think anyone would use that as a logical strategy.
I think, yeah, that would be bad
Yes.
financial advice, I think. And people will tell you that. The topic of the day obviously is cryptos and using that as an inflation hedge. Kind of an interesting dynamic we're seeing now with the irony of cryptos being it's supposed to be a decentralized mechanism for wealth creation, used as a currency, has software features, used on the blockchain. But really, it seems that a lot of the volatility in the space comes from the fact that it doesn't have the regulatory oversight that can kind of shape the market around it and provide a little bit more of that stabilization that you used to be seeing in public markets.
Yes.
So we'll see kind of where that goes on a broad basis and kind of whether it can be a dependable asset class for people over time. But in the moment we're in now and looking forward slightly, what do you think about cryptos as a inflation hedge?
I think you're going to see it as a competitor to gold. Really, you're seeing a lot of family offices get into the space. There's a lot of research coming out that family office wealth, maybe 1 to 3% of one's portfolio, is in the more liquid cryptos, the more like bridging things like stable coins, bitcoins, ethereums. They like it. It's the same reason they like gold. They're not doing it to make the next $1 billion, but they're doing it as a hedge. I think the primary risk with cryptos is exactly what you stated, is that huge beta risk, right? I mean, you're seeing massive fluctuations in the market until the market became into a regulated fashion, which is what personally I think will happen, is you'd have to go into a regulated market, similar to what you'd see in a regulated currency market. You're going to have those massive swings. And so the short-term volatility will always be an issue, I think, for anyone investing in that. So if you're going to invest in it, I would say it needs to be a buy and hold strategy, and hopefully you're long the theme of why cryptos are sexy versus a fiat, which we won't get into here.
Right.
But for a short-term strategy, say, look, I want to hedge for 3 months. I don't think a crypto hedge would be appropriate at all.
Yeah, for sure. So the one that we're most familiar with is farmland.
Mm-hmm.
A lot of attention on investing in agriculture. People are seeing rising commodity prices with what's going on an international basis, from conflict perspective, Ukraine, Russia, at the same time seeing land values increase. What do you think, what would be the benefits of farmland as an inflation hedge?
Sure. I think primarily, to take a step back, and why farmland, you're seeing less high net worth investors get in there to begin with. So the way we've always looked at it is, I would see it like commercial real estate plus on an asset basis. One way to look at farmland is say, on a purely asset basis, what's the yield going to be? What's the cap appreciation going to be? And how does it compare to standard real estate? Instead of doing an operator where you buy a hotel and I'm going to have the Four Seasons manage it as my flag, you have an operator that's, say, for a grain operation or something. And you can do that when you have large asset bases. So if you're an investor going out and splash $10 million on an asset, you can buy an individual operator to manage that. The other thing besides purely an asset basis for farmland, which I think is more interesting, is you need to mix it with the private company space. Own the asset and the operator, and then what that would be called is a company, an enterprise. I think that's where you're going to see a tremendous amount of value uptake in the current years.
And it's about finding the right opportunities instead of talking about it really generally. So, if we're thinking about farmland REITs,
yes,
or ag stocks, if you're looking at publicly traded securities, you're still going to have some of this market volatility that people are worried about, where it can be the best piece of farmland, with the top commodity coming off of it, but you're going to still be subject to these general market up and down. So it's I think, from our perspective and what we're talking to our investors about, what we're doing with the Green Coffee Company, it's good to, I'd say, latch on to private companies that have scale.
Yes. And I think you're seeing, we talked to a fund yesterday about this, but I think you're going to see more private equity funds come out. and place capital into companies that are doing things in the agricultural space, which is really the farmland operations space. I mean, private equities firms' job is to find arbitrage, right? Find alpha where they can get it. And I think from a macro perspective, you're seeing massive opportunities in agriculture globally. And whether it's a private equity firm or you'll see publicly traded REITs, which have less access to deals, I would say, likely than the private equity firms, or just direct investment in private companies, investors have a lot to go with to really go after beating inflation.
Yeah. And you did a little bit of the comparison of farmland to commercial real estate as a commercial real estate plus type play. But, we're also looking at like, what do the statistics say in terms of farmland versus gold? Since 1990, farmland has outperformed gold by 500%. How does it fix some of the problems around crypto? Obviously not going to have the kind of volatility you have there. You're going to be, there's some cryptos where you're talking about stable coins, et cetera. But, with farmland, you're getting a collateralized asset that is unlikely to go to zero.
Yes.
When you're kind of stacking up what the downside potential of your various investments are,
yes.
And that's an interesting, we said we would do the pluses and minuses. I think it's good to do the compare and contrast of
I agree.
these various assets.
I agree. I mean, I think the most important thing about farmland, and I guess it's similar to gold, is the collateralized nature. I mean, it's not a tech company that can go to zero,
yeah.
Right? So you might have valuation discrepancies on what a land is worth, but the likelihood for a 75% drop in asset value, if you priced correctly at acquisition, is incredibly unlikely.
Right. Do you think, sticking to farmland, and the people who say, I think this inflation bump is pretty temporary.
Mm-hmm.
Fed's going to step in, things are going to fix, supply chain weaknesses are going to strengthen over the coming year. I'm not really interested in what's going to make my portfolio better for the next 6 months or a year. I'm thinking more long term. Sticking with farmland and the conversations that we're having with investors, do you see it as a good long-term play?
Sure. I think the first thing out of that play, if anyone's saying, I think the government's going to fix everything from a monetary perspective, it's going to go the right way, I would never plan a portfolio around that, because I think that would be like throwing coins in the wind or something like that. For a long-term play, I would say farmland would be the same aspect as a commercial real estate play. Plan to hold it for a lot of years. I don't think you need to actively trading farmland. Obviously, I don't see a lot of day traders actively trading farmland. And I would argue that don't put it in your portfolio as part of an active trading mentality. I think a buy and hold strategy works really well with active farmland. The only caveat for private companies, if you get exit opportunities at an arbitrage pricing or valuation points, sometimes you got to pull the trigger on that. But for what you're seeing in farmland today, I mean, I think you're going to get cap rates that are significantly better that we're going to see in commercial real estate if you're in A markets or B markets. And I think investors need to be looking at that and taking advantage of it.
Mm-hmm. The one, stepping back to look at it from a macroeconomic perspective as well, you do have a growing world population and a shrinking pool of farmland, arable land.
Yep.
A lot of it being because so much more space is just simply required for human use.
Yes.
So from a supply and demand perspective, we should be seeing prices continue to rise in the farming space.
Definitely. And I think if you read any agricultural report that's honest and done by actual scientific research, you're going to see the amount of arable land decreasing in the future. I mean, that's one of the effects of global warming, right? So you need to be able to make more of what you got to begin with, and you need to do it really in an intelligent manner. So things like arable farmland have to do with, a lot of times, with water supply. So you'll hear whole hedge funds or whole private equity funds talking about, what's the most valuable commodity in the world? It's water. Well, so far that thesis hasn't come to complete fruition, but the theme of arable farmland really does have to do with, a lot of it has to do with water supply and where's the nutrient density land in the world. So certain places are going to do better in the future due to climate change, probably fewer than most, and a lot of places are going to do a lot worse. So agriculture in general, on a global basis, is going to have to adapt to this new normal of rising temperatures. And areas that used to be great for certain types of farming having to migrate crops or having to eliminate agriculture altogether. So people in the agricultural space can't just plant whatever they planted 100 years ago and think it's going to work. That's not a viable option anymore. They need to be thinking, what's my arable land 50 years from now, and how is it going to affect the business?
There should also be some decentralizing happen in terms of where these pockets of farmland are located and where the world is dependent on various sources. Just look at what's going on with Russia right now, right? Everybody's talking about food shortages, fertilizer shortages, issues that are being caused by high concentration of fundamental food elements coming from various markets. So here in Colombia, where we are, there's a lot of conversation around how do we become more of a producer and less of an importer. I think a lot of countries are going to be facing that same reality where they say we can't be so dependent on all of these other people to basically feed us.
Definitely. And you're going to see it, I think you're going to see it all over supply chains. But agriculture is a great example. You know, food independence is incredibly important. I mean, that's a strategically important national topic for every sovereign state. You know, and I think it's becoming more in play with the Russia-Ukraine conflict. But as you see, you know, we talked about this with pullbacks from China or supply chains from Asia, and say, look, we have supply chain issues, whether we have geopolitical issues or not. There's issues with just getting container ships over still, or getting them through U.S. ports, and say where can we have less friction in the supply chain? And frankly, the needs are the same. You know, we still want the same amount of wheat, we want the same amount of soybeans, we want the same amount of coffee coming from wherever. And how do we do it in a more efficient manner, right? So I agree with you. The regionalization of supply chains seems to be occurring already. And I mean, most of our guys are coming from the United States. I think you're going to see a closer connection with Central and South America. You know, you're going to have to. I mean, relying on supply chains purely from, let's say, largely from Asia, or if you're relying on supply chains, let's say, from today's Eastern Europe, that's going to be cut. I mean, and you still need the same product. So how do you adapt for the future, plan for the future?
So if I'm a high net worth investor or accredited investor, I know where I can go and buy commercial real estate. I know where I can go and buy gold. I know how to open a crypto wallet and start investing in Bitcoin. But the challenging one, which may at the same time be potentially the best option, is the farmland investment on a private basis. How does somebody, you know, the private individual, the accredited investor, high net worth person, how do they even find these opportunities?
Sure. I think one is, don't do it yourself unless you're ultra high net worth, right? So I would never recommend anyone to really get into the farmland business on an individual basis unless you're probably investing 10 million and above. That's when buying individual assets on a personal basis and hiring operators can start to make sense. It's kind of the same theme as I'd say, if you're going to buy a hotel and go get a flag, you need to be at a certain scale in order to do so. I'd always look for in-country operators, similar to what we do at Legacy Group, but not to just plug ourselves. I think there'll be operators in many parts of the market. I think you're going to see lower yields coming off similar asset classes in the United States, but there's operators who do good deals, ag deals in the United States. To me, to find real yield, I'd look at emerging markets. Personally, obviously, we love Latin America, but there's other markets that you'll have similar type of deals, and always look for in-country managers who can do it. They need to be on the ground. And the second, I think that's always good, is I think there's a lot of US-based private equity funds that are starting to get in the ag space, but you need to rely on them to source and find deals. The only drawback, of course, is you basically have a committed amount of capital and you have no say how it's placed. And once they say, I need you to fill out your $1 million commitment, and we just found a new deal, you need to place 273,000, you're placing that 273, whether you like that deal or not. But I do think that they're in a sophisticated place. A lot of these guys are operating at an international level. So for PE deals, if you have, you know, $1 million plus of the minimum LP commitment that most of those guys will make you fill out, it can be an interesting topic as well.
And maybe this is a topic for another video, but we see a lot of, you know, plot of land deals where I'm going to invest. This is my acre and I get all the proceeds from the fruit that comes off of this, versus what we prefer to see, both from a legal standpoint, economic standpoint, liquidity standpoint, of setting things up in a more formal corporate structure and getting into farmland that way. But, you know, you'll briefly mention it, but, you know, I think the structuring and what you're buying and understanding the product is critical.
Yes. And always just think it's scale. To me, the biggest thing about whether it's private company investing, let's say large land-based investing, the real thing is mechanics of scale. It's very difficult to place $100,000 and to think you're going to have a material effect in any kind of enterprise, or especially a land-based asset.
Yeah.
If you're not placing, I hate to say big boy dollars, but if you're not placing big boy dollars, then really you should be syndicating. And whether you're an LP in a private equity fund or you're coming in as an equity investor in a portfolio company, that's really where you need to be placing capital. It's better to be, a small part of something big than a big part of something that potentially is not worth hardly anything.
Yeah. Wrapping up, we're seeing inflation everywhere. We're seeing it in the US, we're seeing it in Colombia. I think we'll continue to see it as long as the money supply is really high and it's a lot harder to get goods and services. But we're operating on the ground here, focused on agriculture, seeing it as a valuable inflation hedge for our investors. If you want to hear more about what we're doing, listen to more kind of the topics that we're getting into here in the videos that we're making, definitely subscribe and follow along with us, and we'll see you in the next video.
Perfect.